What's up, traders? It's Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is September 9th, 2021. What a crazy day of price action today, team. So today we're going to walk through price action, my trades, outlook moving forward, and some reasons why I took down some risk today. Before we jump into the video, quick risk disclaimer. Nothing in the video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. All right, so box scores for today. S&P 500 as measured by the SPY finished down 0.43%. We have the NASDAQ QQQ finishing down 0.34%. IWM small caps were our big winner for today, only down 0.05%. And then we have the dogs of the Dow Jones down 0.4%. And you can see that, all these indices were moving on very weak breadth. But in terms of the breadth, they actually all closed on or towards the lows of the day. Today was very interesting because overnight, the market was very weak. Then we got a bounce in the morning on the ECB news that was out. They gave an update on their QE program and such. And the market seemed to respond to that very well. Market lifted, but then, the positive tape, was just sold off. So let's take a look at where we are on these broad indices and where we are on these trends. So S&P 500, look at this. This chart is looking more sad by the day. So on the daily chart, check this out. We had maybe like 4 or 5 days of sideways action where we were just consolidating. I was definitely getting, a bit more defensive up here, and I started to hedge my portfolio. And then we've had a couple of, just down days. And what's interesting about this is, and the reason why I de-risked, these kinds of sell-offs can be the most dangerous because it's not like, huge event-driven sell-off, something big happened in the market. Oh, boom, we're down 2.5% in a single day. Maybe we get some leftovers the following day, we're down another percent. And then, by the following day, like the VIX is at like a 35, it's a coiled spring, and boom, you just launch and rebound higher. This is a completely different beast, team, because really what we're getting is just, we'll get some strength in the morning, then the strength is sold off, then we kind of go back and forth for a while, and then we just slowly grind lower by the end of the session. Those are the sell-offs that I personally hate. And what that tells me is, there's a chance that we really are not done with this sell-off. So on the daily chart, we're kind of wobbling over, and now we're trading right down to this 20-day simple moving average, which now just means, in this bullish trend, we're no longer overbought. So, tomorrow we could end up getting a buying opportunity if we just bounce off this 20-day. But we're so close to the 20-day and so close to this monthly value area high that oftentimes when we're at these levels, they often function as magnets. So I wouldn't be surprised if in the next couple days we test this monthly value area high of 44.71.5. Another thing I'm looking at, so check out the hourly chart. Hourly chart, we've been in a short-term downtrend. So this is, in the short term, this is our weekly value area. And you can see, once you're underneath that weekly value area low, that means that most of the market participants that purchased last week are now underwater. So we've been trading below this 20-hour simple moving average, and it's functioned as a resistance level. This morning, it was like, all right, we're breaking out of the downtrend. Look at us. Like, here we go. We broke above the 20-hour, broke above the 50-hour, and then we even broke into the weekly value area. So it really looked like, all right, things are snapping back. That was in a good spot because I bought a bunch of call options yesterday if you watched the video. But then, the top was essentially sold. And then look what happened. So we topped out, at 10 o'clock in the morning or so. So really early on in the session. Let's actually look at our 5-minute chart and see where we topped out. Yeah, so we made our top at 10:30. So really just like the first hour was people bidding this thing up. And then from 10:30 on, it was like, frogs being boiled in water, where I don't think many people realized what was actually happening. And then the dam, finally broke throughout the day. But let's take a look. So let's go back to the hourly chart. I think it's a little bit more significant. So we had a couple of levels that we just, could not break below. So it was right here, this S1 pivot. We had some big green candles, but we kept seeing, these dip buyers come in toward the end of the day. It got very ambiguous. But once we got that river card in the final hour, we saw that the sellers basically overwhelmed the buyers. So it's not like all is lost, but it takes energy to bid the market back up into this weekly value area. And then suddenly now everyone that was a part of that on the long side is now also underwater. So you can only do that so many times until, you just have so many underwater buyers that they go, all right, like now I got to start selling, or, they get offside. So that was really my concern with the S&P 500, that, on the 5-minute chart, we're below value. We're in a downtrend. Then you go to the hourly chart, we're also below value in a downtrend. And then on the daily, we're not in a downtrend. We're still in an uptrend, but now we're under pressure. So like with these things, am I really going to wait until, let's say we clear through this entire monthly value area to start taking down risk? Like, I want to make sure that I'm being prudent and doing that ahead of time. Real quick, let's go over to our NASDAQ. NASDAQ has been showing some relative strength, and it still is. So the NASDAQ, this one is still in that range it's been in for the last 8 to 10 trading sessions, nowhere near the 20-day simple moving average. So this one's definitely painting a different picture, definitely much stronger. And then the small caps, I traded some call options in the small caps that worked pretty well today. And yeah, the small caps, they were outside of value, and now they're back inside this monthly value where you can see they tried to break out, but the breakout was sold. And then our dogs of the Dow. Dogs of the Dow broke below value. Jeez, I didn't even realize that because I wasn't really watching this one. But yeah, we're below the 50-day moving average now. And we closed literally right on the lows. So this is not, definitely not the time to be like super complacent. And let's see, I'm going to pull up as well. I actually have some additional slides just for context for today. So let's take a quick look at Brent. We'll look at our sectors. So our FinViz heat map. So what we started to see today, it looked like there was some rotation on the tape where players were starting to exit some of these FANG names, because for a while it was just like bid everything defensive, technology, all these compounding companies, that have great earnings, stable companies, not sensitive to the economy, etc. But now we started to see some money flow out of those defensives today. And in the morning, it looked like, hey, they're going into cyclicals, high beta, which is great. But then it just turned into a more broad sell-off. And then sectors. So KWEB, this one was the sleeper today. I love the action in KWEB. So we got more bad headlines out of China overnight. Oh wow, and look, it's 6:01, so we can actually see where the futures are opening. That's pretty cool. Okay, so we're positive 0.01%, team. Let's see what happens. But yeah, so KWEB, let's check that one out. KWEB, we had bad headlines. It was like, oh, China's coming after Tencent, whatever. So I think everyone's natural reaction is, oh my gosh, these companies, they're going to sell off big because, we're conditioned that Chinese stocks are in a downtrend. But I think that downtrend is breaking. And look at KWEB. It put in a nice green candle. So I really like that. Okay. What else did we have, though? So in terms of these sectors, yeah, it was haves and have-nots. So yeah, you can see we had big sell-off in emerging markets, internet and e-commerce, big sell-off in real estate, all these more defensive areas. But there were some pockets of strength. So the SPAC ETF was up 1.26%, kind of odd. Solar stocks were up. Aerospace and defense, some retail. Speaking of retail, one name that looks really strong, just have to go into this one. So this one is Restoration Hardware. RH, I think this one is looking like an awesome setup. See, reported earnings, really strong earnings. And look at this, we're breaking out of value. And this could be a nice breakout because we've been in this base for quite a while. It's Restoration Hardware looking very solid. But anyway, that's just an aside. That's some little bonus action right there. Style factors, same thing we just talked about. High div, low vol really sold off, and high beta was actually positive, and momentum was positive as well. It's definitely some mixed signals, but here's why I didn't want to be too complacent today, and here's the reason why I actually de-risked a bit. So this equity put to call ratio, we're on, what is this, day 4 of these red candles in the S&P 500, and no one is buying puts. So the main narrative I've heard from strategists everywhere is like, oh, everyone thinks September is going to be a horrible month, so everyone's being too defensive right now. And I was definitely buying into that, but every single day I'm seeing like, no one's buying puts. No one's buying puts again. No one's buying puts again. It's so funny because basically in the beginning of the summer, the Fed said, hey, tapering is on the table, get ready for it. And in the beginning of the summer, everyone was loading up on puts. Look how high this equity put to call ratio was really since May. And it was like this awesome thing. We were climbing a wall of worry. Now what's interesting is like we're actually getting up to the taper. And now like no one is hedging and no one is really prepared for the downside. So that definitely caught my attention. When I see we're in a sell-off and no one's buying puts, that always tells me, we haven't hit anyone's max pain point yet where they even want to buy protection. And then the seasonality. So check this out, team. Seasonality for September is very challenging, and October as well. I think for most traders, if you were to just like avoid trading, literally in February, you took a vacation in February, and you took a like February into March, and then you took another vacation September into October, I think most people would have much better P&L. We're literally right here. So in terms of the seasonality, this might fit perfectly to a T. Maybe we get some strength into OPEX, which is next week. But, what do you really have to look forward to in terms of seasonality? Really nothing. So I'm like, the market's starting to get weak. No one's buying puts. And the seasonality is about to turn, incredibly weak. I was like, I don't know. Because I'm doing the investing championship this year. And, I'm having a pretty fantastic year right now. So I'm like, there's definitely a version of this story where, I just continue guns blazing. And then it's like, oh, and then the market corrected in September into October. And it's like, man, if I saw that the seasonality was going to be so bad, like, why wouldn't I de-risk? So that's another reason why, for me, it just made a little bit more sense. Okay, so let's talk about those things. Let's jump into some of my trades for the day. We're definitely not going to have time to go through all these. So some common stock trades. Really what I did, I entered 2 stocks in the morning. I entered DLO and LTHM. I ended up stopping out of both of them. So I stopped at a DLO at 64.21. I had paid 64.39, so basically scratched it. I think DLO ended up having a pretty good day, so I'll be looking at this one tomorrow. But DLO, which is no big deal. Yeah, so DLO actually looked pretty good into the close. Closed at 64.8. And then LTHM, stopped out of this one. This is a materials name. Let's see how this one closed. Watch, it's going to be like, oh, wow, that one closed strong too. Now, let's see. LTHM. Yeah, this one closed a little bit lower than where I sold it out. So yeah, LTHM, the breakout pretty much failed. And then, I also closed out my Bitcoin trust for $37.50. I paid $36.03. And really the reason why is just because September, very weak month seasonally. It's actually the worst month seasonally for cryptocurrency. So another thing I'm thinking about is, let's say we actually get some weakness that plays out in the market. Let's say the market were to correct 5%, or, God forbid, 5 to 10%. That would be like insane. People would lose their minds. But if that were to happen, my portfolio was so heavily invested in cryptocurrency. It was like 75% of my portfolio, literally, or like 80%, just all in crypto plays. And I'm like, even if I'm not taking risk in equities, if we get a big sell-off, big market event, I'm still going to take such a huge hit in crypto. So like that's my big risk factor in my portfolio, like a crypto sell-off. So I was like, you know what? I'm going to just close this out. It's not like I had a huge winner in the Bitcoin investment trust. And, we'll see. This thing, like I'm very bullish on crypto. So, these things could just rip and then I'll be like, oh man, why did I sell those? But that's okay. That's kind of part of being a trader where you have to make decisions. And you make those decisions given the information that you have in hand. And then, you see how things fall. If crypto just starts going super bullish, I'll just add this right back. And then I closed out 75% of my Ethereum trust for $33.58. I had paid $26.31. And I just put, this has been the trade of the year for me. Over 50% of my account was in this. Me cutting 75% of my holding is still owning an overweight position for 95% of investors. And I just had trimming some of this in case September-October seasonality actually plays out. So yeah, that was a very difficult decision because I'm super bullish on Ethereum. But again, I was sized like a complete cowboy in Ethereum. And yeah, it's kind of like you just have to have your your jumping off point essentially. Close it out a little bit higher than where it finished the day. So as I look at this, like sometimes those huge red candles, they can precede, further weakness. Like we saw that, back here. This was the first huge red candle where we pulled back to the 20-day. And that preceded even further weakness. So this right here, huge bearish engulfing sell-off to the 20-day. Then we get one candle where it looks like we're going to push up. Then this one just kind of bearish engulfs that candle. So it's like, at this point in time with that weak seasonality for crypto, like, do I have full conviction that this thing is not just going to spill a little bit lower? I don't. So I'm still invested in this Ethereum trust. But it's more like a regular person's overweight position. It's not like, because I was fully in this thing. I remember adding like 33% of my account in it. Then I added even more. And then I have like a 30% gain in it. So it became an even bigger part of my portfolio. So yeah, it just kind of makes sense. But who knows? This thing could literally rip tomorrow. If it does, it's a good thing. So I'm still in it. And then let's take a look here. So those are some stock trades for me. And then I did a ton of options trading. I'm just going to get into sort of like the psychology of what I was thinking. So I had some nice trades. Microsoft I tried early in the morning, cut it very quickly. I had a nice winner in Datadog. I took three targets in this thing. Highest one was at $5.60. I had paid $3.73 for it. Hut, this one I diagonalized my calls, and I ended up just taking my Hut diagonal call spread off because I own the stock. So I was like, you know what, why not? I tried a PDD lotto into tomorrow. PDD's my favorite name in China, and I have a big winner and some options in PDD. So I was like, let me try for a lotto. This was at 12:37. Market started to get so weak. So I was like, I'm hitting out of this lotto. So I just stopped out of it. And then I started shorting the SPY. And it was so tough for me because I was like, it looks like it's going to break down, but it just wasn't quite, getting that breakdown that I was looking for. So I ended up closing those out for like very small winners, tried for a lotto, closed that one out for a small loser. And basically at that point, this was where I realized, like at that point in the day, like, so this market's very tough to short for me right now. But it's also looks like, it's literally rolling over all these other risk factors. So I was like, this is the kind of market environment where I can really get hurt. Where you're just in like a grinding, slightly downward market that's tough to get long and tough to get short. And that's actually what prompted me to just close out a lot of my risk. So now I have like 67% cash, 33% invested. And yeah, we'll see what happens tomorrow. For me, that's not a big deal. Like, so I posted on Twitter, looks like the market's going to flush here. And that was, when I could just see like, there's a lot of players underwater. Like they keep trying to bring this thing up and it's not working. And it's so funny. I think a bunch of people, like, I never really like make predictions or anything on Twitter. I think a bunch of people were like, you know, they thought I was like that like prediction guy or whatever. It's actually really funny. But yeah, they were like asking me like my prediction and whatever. I was like, geez, like I never predict anything in the market. Like, it's kind of funny because I'm so into like my process. Like my process relies, you know, nothing on prediction. Like I've never met like a good investor that's like, oh, I made my money like predicting things. Like that's just so like stupid. Like it doesn't make any sense. But yeah, so for me, like when I go to cash, it's not like, okay, now I turn bearish on the market. Now I got to stay in cash the rest of my life. No, when I go to cash, that actually allows me to be aggressive. So if we get weakness in the market, suddenly I'm in the driver's seat. Same thing, you know, the market just gets very strong, you know, I can just put that cash right back to work. So I try not to like stick with a bias, you know, or anything like that. And that just works a lot better for me. And then before we break, let's jump over to our VigTech options races. So let's see what was going on in option flow land today. So let's see, we'll look at today's combined flows. And this just shows you throughout the day where the most options order flow was. I just love looking through this thing. I just think it's pretty cool. So of course we got our SPY flow, we got our Tesla flow. Tesla takes the lead. SPRT, I'm pretty sure this is a meme stock. We got some different names on here. So let's take a look at UNH. I rarely ever see that one on the list. Yeah, this looks horrible. Not going for this one. This looks terrible. But maybe, you know, maybe it works against the 50-day, but I don't know what was going on there. Let's take a look at one more. Let's take a look. Oh, AMC. Somebody pointed this one out to me. AMC looks crazy. Check this out. So this one, in terms of a technical setup, AMC is really starting to shape up. So this will be another one that's on my watch list for tomorrow. That about does it for this market recap video, team. Hope you all had an awesome trading session. And I will see you all tomorrow.